If you are really inviting the pump into your life, it will come.
So welcome back to the channel. In this video, we're taking a look at Respect the Pump Week, starting here with Bitcoin, but I'm going to explain a few charts that I'm very much interested in and I'm trading right about now, as these match up nicely between technicals and fundamentals. I've been a big proponent of fundamentals for a very long time, but have been working on my technical analysis side as well. So let me know if you enjoy this type of video. I had a few requests on charting some of these cryptos that I'm looking at, but we're starting here with Bitcoin, and we're going to talk about Eric Crown's analysis over the last 24 hours. So that's my morning lead off every single morning to see what is happening in the markets. So currently we're in this kind of position, slap bang in the middle of our range. Top of the range is around 23,600 and the bottom of the range 22,350. So the movement next towards this kind of region, whether we get rejected from here or actually we can actually bust through, is going to determine where we end up next. So one push higher, which is what Eric is actually favoring right now, sees us go to maybe a shallow 24K region. That again could be a busting price action towards the end of the week, mimicking this Friday action we've seen each and every Friday over the last 2 weeks. If we fail here though, however, we could dip down and then start to move towards the range lows around that 22,350, a break below, and we're looking down here somewhere 21.5. So the kind of expectation I'm working with is the potential for one drive higher. We'll see how 23,600 holds up. If we're unable to break it, that may be a good sign that we're going to consolidate and maybe start to put in a major higher low somewhere around maybe one of these regions, 22K, maybe even lower again. This would be a good opportunity for a lot of the indicators to reset. And at that point, we will see if the PTSD really kicks in and whether people want to bid crypto once again and whether we have a consolidation and start to move out of this range to the upside. That is very much the hopium case, my kind of base case at this moment in time, but we'll have to see what we're served up with the next chart. So this is the SPX, the S&P 500. So of course, over the next few days, we've got some big dates. So tomorrow is the 25th of January. That is the Apple earnings. And on the 26th are the Tesla earnings. So two big companies, both of which carry a lot of weight for the S&P. And so these earnings could be very important in terms of a trajectory we continue with, or do we reverse from here? Because this downward trending line has now been breached. No matter how you do it, from wick to wick, candle body to candle body. Yesterday, the S&P 500 did actually break this line here. So we're at around 40.19 right now. But is this just a wick above and we close below, which has happened before, or do we start to push higher and higher? There's lots of factors on the table right now. The debt ceiling in the US being headline news yet again. The potentiality for them to increase the debt ceiling seems pretty obvious, and that may well feed into more of a risk appetite. As you say, look, the US government is increasing its level of debt yet again. Money is kind of meaningless. Do we continue with people just investing their money because they are scared of dollar devaluation? Now, an interesting chart and a very interesting personality is Pentoshi. So he tweeted this back on the 19th of January. I think we're going to get a nasty fake out above the trend line this year that gets everyone super bullish. And then it will wreck both sides with a bit of a nuke down. So we have actually taken out the first high here. If you just see the updated chart by here, we've taken out the first level. He's suggesting we could take out the second level, and we got some green candles that are printing up here somewhere. People will start to definitely move in off the sidelines, and there would be quite a bit of bullish euphoria in the market at that point, but he sees us going lower after that. So definitely a key consideration to be had. People are, bearish on the main part, I would say, in terms of my timeline, but there's a lot of people getting euphorically bullish who got in early for this rally. But I think this chart really just helped define what this is right now. It is a player versus player market, but we are seeing signs of a slowdown in the net outflows of stablecoins from the crypto space and potential for some net inflows. If we have net inflows, it becomes a positive sum game, and this would be a precursor to what a bull market entails, which is when this red line here on screen just starts going up and up and up. Money's flowing in and everyone can make money by literally buying almost anything. So on DeFi Llama, go over to stables and overview, take it to total market cap. So I've just pulled this from the start of the year, January the 1st. The market cap of all stablecoins was $137.8 billion. As you can see, as the year was progressing here, the first week or so, it went down to 137. It dips into 136 territory a few times here. But then over the last few days, it's come from 136.6 and up to 137.14, and then today 137.01. So at least there is a stagnation in the actual amount of stablecoins in the market. So not a net draining of the pond. And what's interesting to then look at is the blue line here, which is the TVL. So the amount of stablecoins are locked. This would suggest more leveraging in the crypto space. And as you can see, the blue line is ticking up here. So this would suggest more and more leverage, gone from roughly 62 bill of leverage to 71, 72 billion right about now. And that is over the period of the last 8-9 days. So my summation of this is that it is still a player versus player market, but this could potentially lead to more people stepping in off the sidelines and committing funds to crypto depending on the political landscape. But also, if this does continue to tick up, this is what the whales want, to draw more of a crowd in. But I do expect we will have a nasty jump down at some point, but I do think that will be a higher low. I can't really at this point in time see us breaking the previous lows already set. So I've got 4 charts to go through here and a bit of an explanation as to how I set them up. So these are all LSDs apart from the last one, which is Manifold Finance, a bit on that in just a moment. And I particularly want to look at the LSD tokens because this is the strongest narrative in crypto. Hence, I think it deserves the most time to be spent on it. And there's just so much going on across the crypto landscape. If you can just focus in on a key narrative that is likely to have growth potential, well, then maybe you can make some good decisions around that. So what I do is chart this on the weekly, and I typically pull it out to a line chart here. And with the line chart, you get a better outlook as to the previous price action, areas where we had previous areas of resistance, and how these have been flipped into support as time has gone on. Use the support here, and when you pull this into a daily, the picture does become clearer yet again. So starting on the weekly, moving it into the daily, and then actually throwing the candles on afterwards to see how we're moving in these kind of ranges. So as you can see, around the $2 area for LIDO was a nice area. I did make a purchase around here. I recently sold some and took some profit here around $2.60. I want to catch the meat of the move, but I'm not going to get too overly greedy and try and pull it all the way up to the top of the range, which is around $2.80. And as we're going to see, there's some other charts here in the same narrative that are in better positions in my opinion. You can see LIDO is moving towards the top of this range right about now. Then upward targets, we've got the likes of $3 here at this kind of wick area, just around here. And then you can see about $3.50, and then the all-time highs around $4.80, a potentiality for this year. Over to Rocket Pool on the weekly here, you can see a wick back up here, $24. This was a previous area of resistance here on a few times before we bust on through, taking us up to the next level, which was here at around $30. You can see there's quite a lot of confluence through here for Rocket Pool. We'll bring this to the 4-hour chart real quick, and I'll set it to the candle bodies again. This was the Binance wick up to $41, which we just recovered last night. So I'm expecting this one to actually pull back towards this region around $37 for a consolidation here before we move to the next level, which will be around $58. That actual move is pretty meaty there at around 53%, but that is a potentiality with Rocket Pool for all the fundamental reasons I've mentioned in previous videos. Make sure you check those out. Over to FRAX shares. FXS, a big mover here in the LSD narrative. You can see this huge move, a lot of momentum here. And $10 is an area now it needs to consolidate around before the next leg up. But I will be trying to position for this next leg. As you can see, from around $10-ish, the next leg is towards 13. That's around a 30% move. And there's quite a lot of clear skies until around 16, $17 there. So 60, 70% move is a pretty meaty one that I'd want to try and catch. And there's also a lot of volume coming in for FRAX. We'll just check out DeFi LLAMA in a second. But the final chart to show you is Manifold Finance. This is kind of like an under the radar cryptocurrency that many people just don't know about. Manifold is an MEV protection solution that is being implemented by SushiSwap right now called Sushi Guard. So this is a Q1 implementation that is currently ongoing. They're testing it on Polygon. It's going on to mainnet, may even be live on mainnet right now. And once the MEV protection is live, all of that MEV capture actually goes to the Fold stakers and SushiSwap stakers. So this could be a lot of revenue coming to the Fold token, and a lot of big brains are actually in this one. Kobe holds a ton of this token and has locked it up, and it is highly illiquid as well. So it does move between these levels quite frequently. The next level up here is from around, say, $25 all the way up to $35, a 40% move. And then we're looking towards some of these ranges around $50 or even towards the highs at around $85 that it posted back in September. If you're quite new to TA, I would suggest getting the line chart up. It is probably the best one to actually see more clearly where your ranges are likely to be forming. So on screen, DeFi LLAMA and the LSD narrative here. And here you can see the TVL of some of these protocols has been going up a lot over the last 7 days. 10% increase for Rocket Pool, but a huge 60% increase here from FRAX. So FRAX Ether is getting quite a bit of adoption. It has the greatest APR. So DeFi users clearly wanting to utilize that. And this should translate to a higher token price for FRAX. I know it has pumped up quite a bit already, but the FXS token actually is used for a range of different things, and it is locked by participants for up to 4 years to gain from protocol revenues. So it really is a bit of a Swiss Army knife in the DeFi sector, and one I'm trying to accumulate now for this next leg higher potentially. So let me know down below, did you find this video helpful? Are you likewise in the LSD narrative? I'd love to hear your picks in the comment section. And if you're trading the likes of Bitcoin, Chainlink, ETH, or even Uniswap, check out Arbitrum, video popping up on screen for you now. Get to know how to use that protocol. I'll see you in the next one. Peace.